Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast. Global equities remain volatile over the past week as hawkish comments from Fed Chair Powell and rising US bond yields amid lukewarm demand for longer-dated securities at the weekly auction dented market sentiments. At a conference in Washington, Powell mentioned that it was too early to declare victory against inflation and indicated the Fed's preparedness to raise rates further if it deems appropriate. Asian equities came under pressure after Chinese CPI inflation turned negative again, while exports growth data indicated a sequential decline in the month of October. For the week, the MSCI China, ACIX Japan, and MSCI World indices changed between negative 1.5% to positive 0.6%. In the US, the Dow Jones Industrial Average, S&P 500 Index, and Nasdaq Composite rose around 0.7 to 2.4%. Back home, Indian equities clocked gains for the second week. The Nifty index gained 1% for the week, driven by upbeat global cues at the start of the week, strong earnings reporting, and declining US bond yields. Broader markets outperformed large caps this week, with the Nifty small cap index up 3.1%, while mid cap index was up 2.9%. Among sectors, all sectors ended the week in green except for telecom and IT, which fell marginally. Pharma and utilities led the rally with gains of over 3.4% over the week. The Indian fixed income market had a decent week, with Indian government bond yields declining across the curve, supported by lower crude oil prices and a decline in US bond yields at the start of the week. However, bond yields reversed most of the gains on Friday in response to the hawkish comment from US Fed Chair Powell and lukewarm demand for longer-dated US bonds. The 10-year Indian government bond yield fell 1 basis point to close at 7.3%, while the 3-year and 5-year Indian government bond yields changed by negative 3 basis points and positive 3 basis points respectively. The INR depreciated last week to a new all-time low of 83.31 per dollar as the impact of falling crude oil prices were dominated by higher US bond yields, stronger US dollar, and foreign investor outflows. Brent crude oil prices fell sharply, down 4% over the week to close at $81.7 per barrel on stronger US dollar and mixed Chinese economic data raising demand concerns, while rising OPEC exports eased fears about tight supply conditions going ahead. Among the other macro updates for the week, the first was on India's industrial production, which rose by 5.8% year-on-year in the month of September 2023, but moderated sequentially to a 3-month low and below the 14-month high of a 10.3% growth recorded in the month of August. The moderation was driven primarily by a significant deceleration in key sectors, namely manufacturing, which grew 4.5% compared to a 9.3% rise in the month of August. Output also eased remarkably in mining, which grew at 11.5% compared to 12.3% earlier, and electricity, which grew at 9.9% versus a 15.3% growth earlier. The second data was on India's FX reserve. For the week ended 3rd November, India's FX reserve rose USD 4.7 billion to close at USD 590 billion, driven primarily by a rise of USD 4.3 billion in foreign currency assets. For fiscal year 2024, FX reserves are up USD 12.2 billion, driven by a sharp uptick in foreign currency assets. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.